This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
There is little Russia can do to help with urgent repairs required to malfunctioning Nord Stream 1 gas pipeline equipment, Kremlin spokesman Dmitry Peskov said on Monday, following further falls in Gazprom production and exports. Russia cut gas supplies via Nord Stream 1, its main gas pipeline to Europe, to just 20% of capacity last week, saying that a turbine sent to Canada for maintenance had not been returned and other equipment also needed repair. This signaled a deepening of a row in which Moscow has cited turbine problems as its reason for cutting gas supply via the Nord Stream 1 pipeline.
OPEC's new Secretary General said that Russia's membership in OPEC Plus is vital for the success of the agreement, Kuwait's Al-Rai newspaper reported on Sunday, quoting an exclusive interview with Haytham Al-Ghais. He said OPEC is not in competition with Russia, calling it a big, main and highly influential player in the world energy map, Al-Rai reported. OPEC Plus is an alliance of the Organization of the Petroleum Exporting Countries, OPEC, and allies led by Russia. Al-Ghais, Kuwait's former OPEC governor, will head his first OPEC Plus meeting on August 3, in which the group will consider keeping oil output unchanged for September, despite calls from the United States for more supply.
Moving on to the top news in the energy sector.
Gasoline and gasoil sales by Indian state refiners in July fell from a month earlier as monsoon rains restricted mobility and construction work while high inflation curtailed overall demand for goods, preliminary sales data shows. Fuel demand in India, the world's third biggest oil importer and consumer, typically falls during the 4-month monsoon season beginning in June as parts of the country are hit by heavy floods. Gasoil demand in July fell by about 16% to 6.42 million tons while gasoline demand fell by about 8% to 2.66 million tons, the data showed.
Oil prices dropped on Monday as weak manufacturing data from China and Japan weighed on the demand outlook while investors braced for this week's meeting of officials from OPEC and other top crude producers on supply adjustments. Brent crude futures were down $1.42, or 1.4%, at $102.55 a barrel by 10:17 GMT. U.S. West Texas Intermediate crude was down $1.85, or 1.9%, at $96.77. Fresh COVID-19 lockdowns snuffed out a brief recovery for factory activity in China, the world's largest crude oil importer. The Caixin Market Manufacturing Purchasing Managers Index, PMI, eased to 50.4 in July from 51.7 the previous month, well below analyst expectations, data showed on Monday. Next, we have the top news in metal markets. Some investors want Russian gold off their books, but it's not that easy to remove. A de facto ban on Russian bullion minted after Moscow's invasion of Ukraine, instigated by the London market in early March, does not apply to hundreds of tons of gold that has been sitting in commercial vaults since before the conflict started. Fund managers looking to sell the metal to avoid the deepening reputational risk of holding assets linked to Russia in their portfolios could trigger a costly scramble to replace it with non-Russian gold, according to bankers and investors.
Iron ore prices edged higher on Monday, extending last week's solid gains and spurred by hopes of increased infrastructure spending and prospects of property sector bailouts in China. Uninspiring factory activity data capped gains, however. The most traded iron ore contract on China's Dalian Commodity Exchange, for September delivery, ended daytime trade 0.8% higher at 787 yuan, $116.55, a ton, after touching its strongest level since June 30 at 817 yuan and 50 fen. On the Singapore Exchange, the steelmaking ingredients September contract was up 1.2% at $116.40 a ton at 0718 GMT, off a session high of $120.95.
We will now look at the top news in the agricultural sector.
The European Commission has lowered its monthly forecast for this year's maize harvest in the European Union by 8%, or 5.9 million tons, joining other forecasters who have cut their expectations due to torrid weather in the bloc. The Commission now sees the EU maize, corn, crop at 65.8 million tonnes compared with 71.7 million forecast in late June and 72.7 million harvested last year, supply and demand data posted late last week showed. The Commission did not refer to weather conditions in a website note, but said the forecast cut mainly reflected lower yield projections for Germany, Spain, France, Italy, Hungary, Romania and Slovakia. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.